Hey everybody, welcome to the morning market briefing. It's Wednesday, March 11th, 2026. Hope you are doing well out there. Hope you have already subscribed to the podcast. If you have not, go ahead and do it. We're on YouTube, Morning Market Briefing, everywhere you can get your podcast. And make sure you check out Jacob's Ladder, the jacobsladdergroup.org. You can learn more about that organization. And again, on April 1st at 12:30, we're doing a lunch and learn with the founder of that group. So come check it out and learn more. Tom, Ben, how we doing?
Feeling good, feeling strong. Got some hot data coming out.
Yeah. So we are anticipating CPI coming through here. Ben, Tom, do we have it up?
It's through. I would say nothing that's really going to move the needle, though, because everything is in line with expectations. So headline number for month over month was expected to be 0.3. We came in at 0.3. Core month over month expected to be 0.2. That's where we came in. And then headline year over year is expected to be 2.4. That's where we came in. Core is expected to be 2.5, and that's where we are. So not a lot to write home about. Real average hourly earnings year over year up just 1 point. Hang on, sorry, I'm getting a message on my Bloomberg blocking me. Up 1.4%. So I mean, it's really not a lot there, really, Ben. I'm sure you've got the data pulled up from the Bureau of Labor Statistics, but I'm interested to see where the housing costs came in.
Yeah, shelter's coming down a little bit now. It's 3% on a year-over-year basis, 0.2% on a month-over-month. Still, 3% is a little bit hot relative to the live data that we're getting. For what it's worth, we built a inflation tracker that uses live data. It scours for Walmart and Amazon prices. It looks at Redfin. It looks at Zillow. It looks at homes.com. It looks at apartments.com, and looks at what rents are doing, looks at what gasoline prices are doing, and looks at what food prices are doing. And what that says is that inflation was 1.3% on a year-over-year basis in February. Since the rise in gasoline prices alone, we're back up to 1.8%. But basically the big difference there is nothing more or less than just the shelter component. There's some other ingredients, perhaps a little bit on the food side, but the vast majority of the difference is on the shelter side from our methodology and what the Bureau of Labor Statistics uses. If we look at it on a month-over-month basis, or even just an inflation basis on a item-by-item basis, we have apparel that was pretty. I mean, it was up 1.3% on a month-over-month basis, so that was a little bit of a hot data point. Medical care services accelerated, now 4.1% on a year-over-year basis. Airfares up 7%, which isn't surprising given what given what oil prices were doing. So I think a lot of the items here make a lot of sense and fit with the overall narrative of what's going on. Bottom line, in my opinion, is that we're really not seeing a whole lot of inflation outside of energy-related items and things levered to that. We are seeing some pickup in jewelry and some medical, but other than shelter, it's there's not really systemic inflation, I would say. I mean, I think, and that's what the data is saying. I mean, even whether you think our number's correct or whether you think the BLS is correct, we're about 2%.
Yep.
And in the context of employment market that's weak, you could definitely make the argument that the Fed should be cutting right now.
Yeah.
They're not going to because of what's going on and around.
Because the old data they'll get next month is going to be elevated. I did see, I was just quickly trying to find it. There's a guy who, in a similar way that we built our CPI tracker, had built one and did a whole tweet thread about what he called, it was something like redneck CPI or hillbilly CPI.
Love that.
And he was talking about how if you went back 10 years, that you would basically have 95% loss of purchasing power. And the basket of goods was like a shipment of propane. It was 2x4s. It was like a pound of nails.
Used F-150s.
Yeah, it was like shotgun shells. It was a bunch of like really funny stuff, but also stuff that people, the average person not living in a major city would need had basically increased by 95%. It was a pretty interesting kind of breakdown of things, most people don't think about, but a lot of people who live outside of 50 miles of a major city would be thinking about on a daily basis. Just trying to find it, but I couldn't remember the exact wording was trying to pull it up on Twitter, but it was like redneck or hillbilly or something like that. It was
Love that.
pretty interesting.
And what's really interesting, so, we're talking about all this. If you just look at what was inflation outside of food, energy, and shelter, do you have a guess of what that is?
0.
I think it might be negative.
It's 1.9%.
Oh.
So
For 2.
I didn't really get the answer I was looking for there, but
we tried.
But my point is, inflation's come back.
And when you think of affordability, which is such a buzzword right now politically, I do think there's a general ability of people to just say, well, the electric bill is what the electric bill is. I don't think people, obviously they would like them to be lower, but I think as society we have generally accepted that when we get the bill from the power company, the bill is right and we pay it. I think most people are fairly comfortable with whatever their agreed upon lease rate is or their mortgage is. They may not like it. It might be higher than what they want it to be, but it's accepted. So when you think about affordability, in my mind, you're kind of thinking about everything else. So to be at essentially 2%, a little bit under, I don't think either side of the political aisle, and one side it certainly makes more sense because they don't have control, but I don't think either side of the political aisle has done a good job of messaging that.
Yep.
Energy costs looking forward, Ben, what's the plan here?
I think this is where things get tricky for the administration. So first of all, they're doing a couple things. Number one, the International Energy Agency, which not just the United States, proposed a big release of barrels from the strategic reserves. The G7 is meeting on this. Macron, I don't get
how's he
France,
the dog?
He is the guy on everything. I don't know. I don't get how he's kind of weaseled his way into like the arbiter of Russia and Ukraine. He's always like talking to Trump. I don't understand how he's the leader when his own people don't want him as president at this point. He's lost his party's lost a number of the last elections. They've had 8 prime ministers in the last seven years.
Yeah.
Because they can't get anything through. But he's going to host a video call with the G7 countries at 10 a.m. today. I think we'll get that finalized. That would be a pretty big reserve release. It's only 4 days of world energy supply. But when you think of only about 20% of world oil production goes through the Strait of Hormuz, you're really talking about 20 days of additional supply that you're adding into the market if you do a 400 million barrel reserve release. This would be by far the biggest that we've ever had. It would be higher even than 2022 when we released 182 million barrels. That was right after Russia invaded Ukraine. So that's number one. Number two, and this is somewhat related to this, is just the deregulation push here in the United States. We're having the first refinery built that's going to actually be funded by Indians. So they're going to come in. Reliance Industries is coming in to help build a new refinery in Brownsville, Texas. And President Trump made a truth about this yesterday. He says this is what American energy dominance looks like. So that'll be interesting. I think that deregulation push, I was actually wondering if Valero would be down today because I think entrenched interests actually benefit from increased regulation. Yes, there's a little bit of a headwind. There's a lot of compliance costs that extracts money.
But it keeps others out.
It keeps others out and makes money and economic rents in businesses that should be perfectly competitive. A refining business should be perfectly competitive. There's no technology that goes into it. You just crack down oil into its component parts and then sell those parts. I mean, it's very, very simple. All you have to do is build the refinery. But in a world where we're trying to get away from carbon and there's regulation associated with that, it becomes very difficult to build new capacity. So I was surprised Valero was not down pre-market, but maybe that is just because of the deregulation push there. So I think that's a piece of it as well. That's more longer term. I think in the short term, it all comes down to the Strait of Hormuz and what's going or what's not going on there. And right now, ships aren't really going through. Energy Secretary Chris Wright.
We just talked about him yesterday. What do we think about the guy?
Chris Wrong, a lot of people are saying.
Yeah. I mean, this is really bad on a number of levels. First of all, ships aren't getting through. Secondly, the energy secretary doesn't know what's going through. Third, he doesn't verify it before having a market moving piece of information that he tweets out. He tweeted out that we just escorted a tanker through the Strait of Hormuz. That was actually not correct. I don't know where he got that information or if he made that up, but he then deleted the tweet, and then the administration said, no, that didn't happen. So it's not good there. And then their U.S. intelligence is also reporting that the Iranians are looking to put mines out in the Strait of Hormuz. The Iranians have said that not one leader's going through that'll benefit the U.S. or the Zionist regimes. So it's really difficult, and I think that I have some theories on how the war will end, but like first and foremost, and I know some people will disagree with this, I don't think Trump can declare victory without the Strait of Hormuz being clear. Period. End of story. And I have a couple of reasons for that. Number one is Trump needs negotiating leverage. If Trump just left and declared victory and the Strait of Hormuz was closed, everyone would know that was not a victory. In fact, we're worse off now than before. Secondly, the Iranians are not going to just open up willy-nilly the Strait of Hormuz as soon as we declare victory and leave. That's not going to happen, in my opinion. And the argument is, well, they're going to be trying to be nice to the Saudis. I don't think they're going to try to be nice to the Saudis. I think they're going to say, we're going to keep it closed until Americans give us hundreds of billions of dollars in reparations and allow us to rebuild our stockpiles. And I think that Trump knows that, and he wants maximum leverage. And if the Strait of Hormuz is closed, he has minimal leverage.
I mean, I think this whole war is a strategic.
Real quick, Hicks, I just sent you an image on Teams. I'm wondering if you could pull that up.
Little meme action.
And throw that on the call as we're talking about escorts.
We've talked about it on the call. I think, honestly, what I think sold a lot of people on Trump, and I would be included on this, is the way we crushed the communist regime that was the Russians in the 80s was by just dominating on the home front. You know, being the shining beacon on the hill and executing economically where, you know, heavy communism did not execute and was mostly miserable for those people, and they wish they had rock and roll and blue jeans. And I think that's the problem, is that, one, these people don't want rock and roll or blue jeans or even, you know, dresses, I would argue. And so I think they should leave them alone. But I think we put ourselves in a bit of a pickle here, and I don't know what the exit strategy really is.
I'm curious, Ben. I don't know if you listened to Two-Way last night. We referenced this a lot, but I mean, it seems, or at least, and this is one source, but Mark Halperin, who I think has a pretty good pulse on things, famously was essentially at Mar-a-Lago when this war began and was reporting on it. He keeps alluding to like this much bigger chessboard in terms of what's going on here. And it seems like things are potentially going to be, if he is to be believed and his sources are to be believed and he has not put everything out there, it seems that the off-ramp may not even be something we're thinking of, which is a little bit daunting, but also interesting. We do have a new meme up on the video. It's the handshake meme for those listening in audio only. And it's Chris Wright shaking hands with Hugh Freeze and bonding over telling lies about escorts.
It's good.
So, I just felt like the people needed that. I don't know. It just came to me, you know.
We can't talk worse about Hugh Freeze. We can't let that go. We got to continue to.
We've got to keep that top of mind for everyone.
Just like I said, maybe the strategy is every couple months we just need to smack Iran. Every couple months we need to remind people that Hugh Freeze is a scumbag.
Yeah. That's it's not why the call exists, but because the call exists.
Yeah. Somebody's got to do it. If nobody does it, then he's just going to continue to be hired at prominent institutions that are often brought up on this call.
Yeah.
Even though he shouldn't be.
Ben,
Oracle's up 10%.
Yeah. Let me just kind of address first your point on the bigger chessboard. I agree with that. I think that And I think he's completely right that there is a bigger chessboard here, and there's a bigger plan. I think that this is a component of the plan that's probably not going according to the plan, and I do think the Trump administration wants out of this at this point in time. Israel's kind of continuing to push. There's clearly been a delineation between what the U.S. administration wants and what Israel wants at this point. Even just yesterday, Netanyahu saying that they're going to continue kind of this maximalist push, and the U.S. meanwhile is how do we get out?
Yeah.
Again, I think as it relates to markets, the longer, as long as the war will continue, as long as the Strait of Hormuz is shut to its vessels and not safe, and the mines are not going to help that. I think if they can get some sort of regime change, we're seeing the cardboard cutouts of the new Ayatollah.
That's so funny.
And then meanwhile we're seeing kind of Reza Pahlavi saying, "Hey guys, get ready. We're about ready to storm the Capitol and take our country back." So
that usually goes well.
So we'll see what happens with all of that. I think the regime change would be nice to see for the U.S., but is not a determining factor at this point. I think it's more of a determining factor for Israel. I think that's where the key pivot lies. I think for the U.S. is, hey, we can't be in a worse position than before. And I think if Iran controls the Strait, the U.S. is definitively in a worse position. With respect to Oracle, so Oracle reported earnings last night. I think the big news there, and the reason the stock's up 10%, yes, revenue was fine. It was in line with their guidance, but the gross margin was much better than expected in the Oracle Cloud business. There was a thinking that the Oracle Cloud would just be about 30% in terms of gross margin. They came in at 32%. This was a business that was below 30%. So the whole idea that they're not making money on Oracle Cloud infrastructure was put to bed, at least for now. Now, there are a lot of assumptions that go into gross margin on cloud infrastructure, not least of which is what depreciation is. So if you depreciate your chips over 50 years, you're probably going to be more profitable. You are going to be more profitable than if you depreciate your chips over 5 years. So I think there are going to be some assumptions that go in there that might come to light at some point. Fiscal year 27 guidance was pretty solid. It was a little bit ahead of expectations, but they did not give CapEx guidance for fiscal year 27. And that starts next quarter in 3 months. So I think the reason they give revenue guidance, which frankly, they know less about revenue than they know about CapEx, because you can plan for CapEx. That's within your control. Revenue is not necessarily in your control. So my concern is that CapEx is high. On top of that, yes, they're up 10%, but they also have a deal where they can sell up to $20 billion of stock over the course of this year at the money. And so if I'm Oracle right now, I'm shoring up my balance sheet today.
Today's the day.
Today's the day when I'm selling into some volume. So I think that's going on. And
do you think that will impact the price? I mean,
I think
presumably we'd sell off from here.
Yeah, I think that will be potentially. It depends. You know, if they don't sell today, I think that's a huge endorsement of where they think they are financially. If they sell today, then that's probably smart. Doesn't mean that things are bad, but it's a smart decision when you're having so much capital invested here. The other thing is cash from operations was a little bit weak. So at the end of the day, they need to have cash. But it's a bit of a relief rally for a stock that's fallen so much. The question then becomes is Oracle enough to call the bottom in software stocks? They definitely made some comments that said this is not the death of software as a service. In fact, we're actually using AI tools and their coding capabilities to produce more and better software faster than we did before. So their view is that is actually a benefit to some companies, but then at the same time you have JP Morgan pulling out of lending to private credit funds. So that lend to software companies. So I think this is all kind of still very much in flux on the software space, very much in flux in the AI space. I would not be calling the bottom on software based on this report. I call it a necessary but insufficient condition. You need necessary and sufficient conditions. We need some more conditions to actually take place where we can say we can be confident that companies like Oracle and ServiceNow and Microsoft start to really move higher and discernibly so.
It's not safe to go in the water.
No. Closing thought, sports. Bam Adebayo. You guys familiar with his game?
Yes. What's happening?
He averaging about 20 points a game. He scored 83 points in an NBA game last night.
I mean,
second most
defense wins championships, so.
I mean, that is insane. Bam Adebayo. So there you go. Shout out to Bam.
One more. Nick Timrose putting his spin on it, saying
inflation is hot, even though it came in line.
First, obviously, this was before the economic fallout from the Iran war. Secondly, the very favorable data imputation. By the way, I've looked at this. This is like 7 to 9 basis points. But anyway, Timrose saying the very favorable data imputation in the October report due to the government shutdown unwinds after March. And then some other commentators, one of which I spoke with, says, next month we get the energy shock for March CPI. The month after that, in April, the spurious shelter reading from October is going to fall out. Meanwhile, core PCE set to come in at 3.1 to 3.2. Odds of no cuts in 2026 is 18%, should be much higher. I disagree with that because you're also lapping tariffs, and there's a whole and also like the energy shock that we just saw. It just unwound like 35% in a day yesterday.
And it's not core.
It's not core.
So it doesn't
such
affect.
a dweeb, man.
Yeah.
So I think that
he's borderline un-American.
There's a lot of fear about the inflation side, and yes, I do agree that we're probably going to have some stickier inflation prints in March and April, but just as much as they need to be aware of that, and we're aware of that, think about what happens after March and April. Once those are all that all flows through, then you're just lapping the tariffs into a weaker economy, and I think that in May you're right back down. So that's my opinion.
I still think 2, maybe 3. I mean, it should be 2. I've said that all along, that we should cut rates immediately by 50 basis points, and then should be done.
And I contend, if Iran war did not happen, I know you can't prove the other side of the equation.
Yeah, what would he be whining about?
What would CPI? What would people be talking about right now? They'd be talking about potential rate cuts.
Epstein files.
This.
Word on the street is they're digging up bodies in his ranch.
So. I mean, Epstein's gotten real quiet.
Yeah.
I mean, they'd be talking about a potential rate cut this month, I think. I really do think that with that employment report and where CPI would be, I think they'd be talking about a rate cut. And again, we're about $10 higher on oil than we were before all of this war started, maybe $15 now. But we know that as soon as the Strait of Hormuz is open, we're going straight back down.
I will say the prices are spiking at the pump. I mean, it's like $3.49 at the QT by my house, formerly
Have you seen
Andrew's
the diesel
house.
prices? The diesel prices are like $5.40.
Yeah.
I mean, it's out of control. Though I will go back. I found the tweet. There's some harsh language in it, so I'll just paraphrase. But the redneck CPI was a 150 horsepower Evinrude, Copenhagen, 1 pound of nails, a 30-pack of beer, a single wide trailer, propane, duct tape, fishing license, full-size truck, all-terrain tires, and 30-06 ammo. And your purchasing power has declined from $100. What you get for $100 in 1970 is now $5.25. So redneck CPI has gone up by 894% on those items, which is tough.
Brutal.
Yeah. So put that in your pipe and smoke it.
It's
I
tough.
suppose.
It's tough out there in flyover country.
Yeah.
Just everyday Americans.
I mean, is a fishing license not $10? I haven't purchased a fishing license since I was like 14.
Yeah. Let's see.
But I imagine maybe it's $50 now. I mean, that would make sense mathematically.
It's residential is $15.
Wow. So call it 50%. That's the last time I bought one.
There's so many taxes. Tomorrow we need to talk about taxes. We'll talk about taxes tomorrow. That's beyond the scope of this. But the millionaires tax in Washington passed. So now they have super high sales tax, an income tax, everything tax. Howard Schultz is moving to Florida. Howard Schultz, the Democrat. Good riddance. I can't stand Howard Schultz.
The
for so
creator
many
of
reasons.
social responsibility, the guy who came up with all that stuff,
The
is Howard
destroyer of
Schultz.
the
Out.
Seattle Sonics, who sold them down to Oklahoma, is now moving himself to Florida, crying about it all the way, and then Georgia thinking about doing away with the property tax. So to be continued. Come back tomorrow for more.
What's a bucket of night crawlers going for these days? When's the last time you bought some night crawlers?
Got to look into that.
A basket of crickets.
Yeah.
You know, it's been a while.
I mean, they ought to be cheaper. You know,
Yeah.
they're still out there.
I mean, I don't know. Cricket's very popular in India, so maybe
That's a great point.
the demand is high.
All right, we'll wrap it up there. Talk to you soon.